Oil and gas in Africa is at a tipping point. Sub-Saharan Africa has proven reserves of more than 130 trillion barrels, which equals almost 10% of the world's total supply. A handful of countries like Nigeria have been exporting oil for decades, but for the majority, oil and gas will be a game changer. The Africa Storage and Logistics Conference, hosted by Argus Media in Cape Town last month, brought together various industry specialists to discuss the opportunities around the sector. Key to the agenda was the need for more refineries on the continent.
Some people would not agree that it's simply we need more refineries. Africans would like to take that solution. Some of us will say, yes, we need more refineries, but really we need more products. So how do you get the products? You can get the products either through new refineries or importation. Now, if you import, you are faced with the problem we just dealt with. People might be dumping low quality fuel here. So the thing is, control the importation. Secondly, importation also implies that you are actually exporting jobs because you are growing GDP somewhere else rather than in Africa. Okay, so refineries are the best solution. However, refining margins are very tight. The truth is that 90% of the OPEX in any refinery is really just crude costs. 90% is crude cost. And that is where the reality is that where crude is available on the continent, those are the places where there's potential for developing new refineries. Okay, so
like Nigeria, for example.
Like Nigeria, like Uganda, where they've just discovered crude oil, like Angola, like Mozambique, like Ghana, and that is why these are logical developments. Now, there needs to be a decision taken by the governments to invest some of the money from the crude production in developing refineries, because we are getting into a very competitive situation where you might begin to find difficulty selling your crude because there's cheaper crude from the US and even Saudi Arabia faced that situation, and that's the real reason why Saudi Arabia is building the mega refineries now, because their crude is no longer finding the traditional markets in America. So they're saying, what are we going to do with our crude? And that's the real reason. So we need to begin to think strategically, and that means installing refineries. Because we have the shorter transportation, freight charges to the markets, then we can take advantage of that. The European refineries are not able to do this because they have to import crude over longer distances. So that's why if you hear somebody using the argument, oh, the margins are too low, not quite the same for Africa.
Most of the refineries in Africa are old refineries with old technology and would be classified in refinery parlance as simple refineries, so that they're not very complicated. And as a consequence, they end up not being terribly economical. The thing that a lot of people don't appreciate about the contribution a refinery makes is, in a country, it's not just the economics that it contributes to, it has a broader contribution in the sense that if you have a refinery, you can train people up to develop skills, which then bring a skill base into the country, which you probably wouldn't have if you didn't have a refinery. The other benefits that come from having a refinery is that there are secondary industries that also feed off having a refinery, like the maintenance side and various equipment suppliers and that sort of thing. So one of the things that has to be considered as far as refineries go, existing refineries go, is that their contribution isn't just from a clean economic perspective, it is a broader impact in a social sense as well. So those aspects need to be considered, and it's those aspects that lead to some of the complications of going to the regional side of things, because the question then becomes, well, who loses out on those and who gains on those? And those are the sort of challenges which arise, which create the hurdles to the regional approach rather than the country-by-country approach.
One of the topics up for debate was the opportunity to build regional refining centres, servicing the raw crude of a number of neighbouring oil producers, a move directly in line with moves towards deeper economic integration between regional economies.
The big thing is that if you look at getting refineries to be competitive and economically viable, you need big scale. And in order to get the scale, you need to look at regional markets rather than country by country markets. So that's really the driving force behind the idea of going regional rather than country by country. The problem that you have, though, is there are many vested interests, not only with the countries that already have refineries, but also the people in those refineries. And so the challenge to move from the country by country approach to the regional approach is, I think, quite a significant one.
I think the biggest argument for a regional play again is the scale of the return. And it's that we're talking about a business that is intrinsically a low margin business. It's a business that it also carries with it a substantial amount of risk. Luckily, markets are not very fluid. So a market that's developed can either go bigger or smaller, but it will do so in an incremental manner or in a predictable manner. And so what that presents is an opportunity, rather than to set up a local refining center, but the opportunity to set up something that from its inception carries a degree of scale that makes the risk being taken better measurable, better commensurate with the return, and also creates the business case for a value chain development as against a local opportunity wherein it's great, but it's really small and it doesn't drive the multiply effect on the economy. I think that's really the argument. It's that every time Africa sets out, especially today, can it set out with such a clarity that it sets up businesses that allow it leapfrog rather than grow slowly.
The problem you've got today is that there are a number of refineries in a number of countries. They tend to be small, they tend to be called what we call simple refineries. They don't have upgrading facilities, which means that they tend to produce products that aren't necessarily useful for that market. So up to maybe 50% of the yield of the crude refined is turned into fuel oil, which isn't particularly useful in that market unless it's used for burning for power production, which is not the best in terms of economics. The idea of regional refineries would mean that you could build something a lot bigger, much bigger capacity, and then you get economies of scale, which will then give you, in theory, cheaper product, and product that could perhaps correspond, the yield of the refinery perhaps correspond to the demand in a certain region. We went through a number of ideas, but eventually we considered that perhaps trying to force countries to buy product from a third-party country was perhaps a little bit too difficult, and our final recommendation was that if somebody builds a large world-scale type refinery, then it would have to be able to exist and justify existence in the market, so be not guaranteed anything, basically have to earn its place.
The argument for large-scale regional centers makes sense from an economic perspective because of the low margins associated with refining facilities. However, the issues raised around the vested interests of separate economies have the potential to create conflict down the line. Owandu's Awabokan suggests that neighboring countries should focus on the value chain industrialization opportunities stemming from large regional centers.
You see, when we talk about 5 to 8% GDP, one of the ways we can very quickly establish that sort of growth on the continent is by scale. It's by setting up businesses that are able to scale up very quickly, but never really started very small. They were able to identify opportunities and set them up with good scale from inception, and then also set them up in such a way that they can continue to grow. That way, the support businesses that are built around them also enjoy from that, that scalability. And so if you're going to set up a refining complex today, you're best finding the right market to ensure that you exploit 300,000 barrel per day refinery or more because the storage that would need to support that would also be substantial. The logistics that would need to support that would all be substantial. The financial services that would need to support that would be substantial, and the jobs it would create will be consistently substantial. So that is the opportunity.
Frankly speaking, I would say it's a no-brainer. I hope, it's a no-brainer in the sense that our, what I call it, sister nations, that are in the landlocked Africa, would require access to seaports from a petroleum product standpoint. And the only way that could work is for them to have an efficient way of moving volumes from the ports to their country or storage within their country. And this requires extensive pipeline to go through, that spans through a country, two countries, or multiple countries, as the case may be. It's to the benefits. And those are the gaps that we even identify within the space. Be it running a pipeline from a refinery to, there's a refinery in the Republic of Niger now, which can serve some of the landlocked countries, and which can be done by pipeline. Côte d'Ivoire is looking at running a pipeline through the country into the landlocked countries, Mali and beyond. Ghana is in a position to give access to landlocked countries just above them, Burkina Faso and Mali as well. So I believe these collaborations need to happen, and I'm sure if you move away from West Africa, you move into Eastern Africa, you see the same need between Tanzania or Kenya and the landlocked countries that are bordering. Challenge would be who takes on this initiative. I think that's why private sector like us that have appetite to do it will require the appropriate funding. It's not for a lack of fund, but it's a cost of the fund that is accessible to us now. The construction or the gestation period of the project itself spans years. Then before you finish the construction and even start generating any form of revenue. So these are very long-term projects, but as a business, we have the appetite for long-term initiatives.
The opportunities around the sector have the potential to attract financing from around the world.
The issue isn't the lack of funds. I think the issue is the projects need to be economically viable and sufficiently risk-free. And that's where I think the problems come. If you look at the people who are building refineries in the world today, they tend to be people who have large deposits of crude. And what they're doing is they're actually using the refinery to upgrade the crudes that they produce to product. And as a consequence, the viability, the economic viability of the refinery is not that as critical to them. And because they're big crude players, they usually have very good funding mechanisms as well. So the challenge comes in refining, or the challenge for financing in refining comes from the fact that it's very difficult to get a refinery project without cheap crude to make good money.
Logistics and infrastructure deficiencies are currently two of the biggest obstacles to the growth of Africa's oil and gas sector. And the lack of sufficient functional pipelines is a problem which needs to be addressed urgently.
You have to look at the fact that crude is transported either by sea or by pipeline. Now, it costs a lot more to transport it by sea than by pipeline. Pipeline might cost you just about 50 cents per barrel. Whereas, if you depend on a VLCC, it's somewhere between $2 to $4 per barrel. And so, really, the infrastructure needs to be there. Constructing pipelines between the producing zones and the areas where you want to supply the crude, as well as the product pipelines to take the products to the high consumption areas those are things that we need to develop in Africa. There is also the political will that has to be demonstrated to deal with the sad incidents of pipeline vandalism, which we are seeing in places like Nigeria, okay, where actually the pipeline network exists. It has the largest pipeline system in Africa. Unfortunately, it's not being used because it has been attacked. And so the downstream is now having to spend a lot more money delivering crude by ship instead of by pipeline. So deliberate, courageous action by the governments in Africa to combat vandalism of pipelines by people who are stealing the crude and selling the crude fraudulently abroad.
Vandalism and insecurity around pipelines also opens up the possibility of privatization.
Opportunities, they're endless, honestly, because it's a business that could run on its own. It's a money spinner, but you have to have the right framework. Some people are of the opinion that the government probably won't want to let it go for whatever reason. I have a different opinion. I think that once the governments know that the pipelines will be run efficiently, and they're never going to get into a situation where they feel threatened because there's a problem, one company shuts down and they're not able to transport products, I think they will support it. I think it's the best way to go. Technology has advanced so much today that if you have a pipeline in place, you don't need to be right there to manage the pipeline. Pipelines are managed remotely all over the world, and I don't see it any differently in Africa. We've got the human resources that we need. We've got the land mass needed for all of this. We just need to ensure that we have the security needed in place. I would definitely go for that, for the pipeline. Some people are against it, but I think it's the way to go.
My general concept about such things, maybe talking purely from as an entrepreneur, I think what drives such is competition. If the space is opened up enough or supported for people to make the prerequisite investment in the logistics sector, competition will drive efficiency. For you to be able to outwit competition of your competitors, you need to be efficient. I don't think it's driven by policy. I don't think it's driven by any other thing. I think it's just pure existence of enough players within a certain sector that drives competition. It ensures that for me to say I'm delivering value, we're a service provider. That's a business that we do. So as a service provider, how do I justify a client or my potential client engaging me? Is to be able to demonstrate these are the values I'm bringing to the table. These are my value proposition. And my value proposition was be able to demonstrate from our business, for instance, to be able to demonstrate that you have your product on time, you have it according to your spec in which you gave to us, and you have the quantity that you gave to us. So those are the parameters of efficiency: quality, time, and quantity in this instance.
Meanwhile, inefficient operations at major ports pose a further infrastructure challenge.
I think the biggest issue is probably getting your cargo out of the port. It's the back of port functions which are falling down. Even where you have a situation where the port itself is operating, getting the transport and getting the logistics behind the port to move the cargo out is probably the biggest struggle. It was interesting, somebody commented that the turnover of the tankage in Africa is incredibly low compared to the rest of the world. And if we were able to increase that turnover, the apparent shortage of storage would disappear, because there isn't really a shortage of storage. The shortage is actually the infrastructure at the back of ports.
Infrastructure and refining challenges pose significant risks to the sector, and industry players have called on governments to address them as swiftly as possible.
We need the African governments to take a stand, encourage private investors, give them all the guarantees that are needed, and give all the encouragement needed to take this infrastructure to the next level, and people can invest.
The growth of the oil and gas industry in Africa will mean an increase in local content amongst oil producers, as is the trend already underway in Nigeria.
We're strong believers of local content, and I think we're firm supporters of local content. We believe local capacity should be developed. We have, as a business, as an entity, what we've done, even in establishing our own business, is leveraging foreign expertise. When we started our into-plane business, we are, by the way, the first third-party into-plane business in West Africa. And when we're going to start that business, it was predominantly a field or an area for major marketing companies to do that service themselves. But when we're about to start that, we had to form partnerships with foreign companies that had the expertise to be able to set us up and get us going. And we still have those partnerships existing today for the business. Expertise that don't reside in the local company should be bought or in form of either partnerships or in terms of investment into their business. So we believe in it, we support it, and we believe that's the way to go.
The nature of the upstream business is that the value of the acreage is directly proportional to the value of the proven reserves, okay? And then the contingent reserves to a lesser extent. And you see, what happens is when we look at these big IOCs, and we talk about what they're worth is a mix of what they're currently producing and what they've proven exists. And in Nigeria, what is happening is that some of what they've proven exists is now being transferred to new companies. So essentially it's wealth transfer. And it's unprecedented because of the prolific nature of the acreages in Nigeria, you're essentially transferring established wealth to Nigerian companies, new entities, who will then optimize it and perhaps also grow it, because there's still acreage which hasn't been proven. And it's huge. One of the things it's doing is that it is building the support industry. It's making the banks seek for more capital to be able to tap into some of these activities. It's bringing home back to Africa a lot of the competencies which previously had stayed abroad, and bringing a new searchlight entirely onto the continent to say, look, you know, where could this continent be in a few years? These communities, these industries, these businesses, even the government. So it's very exciting.
Another key issue discussed at the meeting is the need for Africa to adopt cleaner fuel specifications. Problems around fuel quality were found to be of increasing importance as Africa becomes a bigger oil consumer.
The African Refiners Association sponsored a study together with the World Bank, and it revealed that the countries in Africa are spending $1.6 trillion treating illnesses that are traceable to the low-quality fuel that is being used in different parts of Africa. Now, to put this in perspective, in Europe, they've adopted cleaner fuel specifications for this very reason. And many refiners in Europe are now forced to look for alternative markets for their fuel. So they are dumping the fuel in Africa, surprisingly. But this is because for them to meet the specifications which have been brought into place in Europe, it requires a lot of investment, additional expenditure, so they don't want to do that. So they are sending the fuel wherever it's accepted, and that's how it's arriving in Africa. There are respiratory illnesses, there are illnesses that have to do with brain deterioration in children, you know, and so on. And we were absolutely shocked at the result of this study. And that is why it is important for us to adopt the cleaner fuel specifications. So we have developed what is called AFRI 1, AFRI 2, AFRI 3, AFRI 4, and AFRI 5. These are progressively improving the specifications, because it is recognized that it's not possible to carry out the investments on a very short-term basis. You have to spend money, and oftentimes the burden is too much for industry if you bring it just all at once. That is why progressively improving the specifications would reduce these access of lower quality fuels into Africa, so that we can protect the health of our people. The environmental ministries in most governments understand it straight away. However, politics involves a lot of give and take, and we'll find that governments have been very slow in adopting the new specifications. In some countries, they have adopted the easy ones, which is lead phase out completely, because it's been found that lead affects the intellect, the intellectual development of children. That has been accepted in most countries. The other specs which have to do with the lowering the sulfur content in the fuels, again, has been accepted more easily in countries like Nigeria, where they already have low sulfur fuel, crude. Okay? But in other countries where they're importing the fuel, there's been some reluctance, because that means higher costs to the governments. All right. So ARA is carrying out some advocacy with ECOWAS, with East African Economic Community, with SADC, and eventually, hopefully, with the African Union. But it's not been easy.